I feel like I'm getting a cold. It probably sounds like it. But you know what? Rates have been stuck, almost like they're cold as ice.
You're as cold as ice. You're willing to sacrifice our love.
Hey guys, it's your favorite mortgage guy, Steve here. Yeah, I just love that song by Foreigner, Cold as Ice. You know, those of you who remember the bands like Foreigner and Styx and Boston and some of those other legacy bands from like the 70s and 80s, you know, one band could fill a stadium, right? Now it takes all three of them to fill a stadium, and they don't really fill a stadium. But the songs just, you never get tired of them. And you always want to turn the radio louder. And I'm not just saying that because maybe you're getting a little older and your hearing might be getting a little harder. I'm just saying because they sound just as good then as they do today, or vice versa. Listen, let's talk about your questions. Is the market changing? Absolutely. And I'm going to talk about that in a moment. Is it time to refinance? Yes, I keep repeating myself every week. I'm going to talk to you about that in just a second, too. How do I get rid of mortgage insurance? Okay, so mortgage insurance, keep in mind, mortgage insurance is on a conventional loan and it's on an FHA loan. On a conventional loan, if you put 20% down, you likely will not have mortgage insurance. If you put down less than 20%, you're going to have some mortgage insurance. Now, the only way to get rid of it is to get that loan to value below 80%, right? But you're going to keep the mortgage insurance for a minimum of 2 years if you closed with it. But or if you just refinance out of it, it doesn't matter. We'll talk about refinancing in a second because that's the other way to do it. On an FHA loan, doesn't matter how much you put down. You're going to have mortgage insurance. Even if you put down 20%, FHA charges you the mortgage insurance premium. And basically, the only way to get rid of it is to, or after 10 years, like on an FHA loan, or just refinance into a conventional loan. But remember, conventional loans have different credit qualifying criteria, meaning credit scores over FHA. FHA has a lower down payment threshold. So remember, you've got to get those metrics built in to get rid of that mortgage insurance. So, guys, welcome back. Look, if you've checked your stock portfolios, your retirement plans, your 401ks, you have probably noticed a bump, a big bump. I mean, a really big bump. Now, the reason I tell you that is because the stock market's kicking butt. Now, this patience that we've been talking about, maybe finally paying off, because you know what the big news this week is? I'm going to give you one guess because if you don't know, you're going to hear it now. Fed Chair Jerome Powell has basically given the green light for a rate cut at the September 17th meeting. Now, just a quick reminder, that is the Fed funds rate, not direct mortgage rates. Now, historically, do mortgage rates tend to follow? Of course they do. And sometimes they even lead. So we'll be closely watching that. But good news is the economy is stronger. Things are getting better. People are buying houses. And guys, I'm going to tell you again, like I've been telling you for the past 6 or 8 weeks, if you're thinking about buying, get off the negative Nelly stuff, because when rates start to fall, here's what happens. You have a supply and demand issue. People will buy houses because rates are coming down, which is going to push house prices up and lacking inventory. So get out there and strike your deal now. You don't have to lock your interest rate. You can wait a little bit because you can structure it up to the closing date. So guys, don't miss an opportunity. Remember, real estate equity always wins. Now, Powell pointed to a weakening labor market, something that we've been talking about for the past couple of weeks over those revisions from the BLS that kept showing that the data was strong. Well, of course, those revisions showed, no, you guys were not telling us the truth. And now we've had to revise it. Think of it this way, though. These rate cuts, if you're a business owner, right, you've got to keep your cost in line to do what? Keep people employed. If your costs keep climbing, what happens? Well, you may not have any other option other than to eliminate some staff. That's what the Federal Reserve is trying to get ahead of so that people don't have to lose their jobs. Now, he also mentioned tariffs, saying that their impact is noticeable, but he sees this as temporary. Like I said, don't read the headline, read the story. All these headlines, oh, these tariffs are going to plummet the economy. No, they're not, and they haven't. Did you see the other day they were talking about we have picked up an additional $500 billion, I think they said. Don't quote me on that, but I'm pretty sure it's 500 billion because of the tariffs. That goes to the bottom line of our country. It helps cut our deficit. Guys, This stuff is working. He said he sees it as temporary, maybe just a one-time bump in overall prices. And yes, he's admitting that he's seeing signs of the economy is slowing. Now, his bottom line is it's time to adjust monetary policy with likely a quarter point decrease in rates on September 17th. Remember, quarter point doesn't translate into mortgage rates dropping a quarter point. Now, before we get there, we've got some key reports coming up. At the end of August, we've got PCE, or personal consumption expenditures. Then we've got the big one coming out September the 5th. That's that BLS job report. Remember, they just hired a new chairperson because the other person got fired because they just misled us since March of last year, I guess, or was it March of this year? Well, doesn't matter. They got fired because they misled us. If that number comes in weak, it could almost guarantee that cut. So, what does this mean for you? All right, let me talk about this. Many of you have been asking me about refinancing. Remember, that was one of your first questions. And yes, I keep telling you, yes, get in the pipeline, because you know what? The average client that I'm talking to, and I'm talking to you in video land out there, you all call me and tell me you got 80, 100, $150,000 in debt between car loans, uh, home equity lines of credit, credit card debt, and all these other things that you bought. And most people are saving between $2,400 and $3,600 in cash flow. That's why I'm telling you, I'm not worried about your 2%, 3%, 4% mortgage, because it doesn't matter. You're going to save a ton of cash, even with that higher interest rate, because you've paid off all that debt. You've gotten the title to your car, the title to your boat, your jet ski, your Peloton, whatever you bought, paid off all those credit card debts. And now you're living high on the hog because you have more money to spend each month. So listen, call me. Let's get you in the pipeline. Let's see if it works. If it doesn't work, that's fine. We can wait till rates drop further, but you need to get there so you can get some breathing room. Now, something else, buying a house. I want to talk to you about this for just a second. The reason I want to talk to you is right now, we are coming back into precedented times. Precedented meaning we've seen this before. Okay. You saw what happened last year and beginning of this year, where there was no inventory. People were bidding over and they didn't have a choice. Now, all of a sudden, values are coming in and they're stabilizing. Guys, get in the pipeline, call your favorite mortgage guy. All my stuff is down here. It's along the side over here. Over here. Keep this in mind. If you don't get started now, you could miss an opportunity. And why do you want to miss an opportunity? Because that's why opportunity is knocking. So, guys, I'm your favorite mortgage guy. I hope you have a phenomenal weekend. The weather's supposed to be great. You call me, and I'll talk to you later. Bye now.